Look, hating on me, don't stop shit. Only help a real nigga cause. Hood.
Hello guys, welcome. If you have actually watched my videos where I talked about types of forex analysis and you are here to learn about Fibonacci extension, you are in the right place. Okay, let's dive into this lectures of today. Okay, first and foremost, before you use Fibonacci extension, there are rules and regulations that you're supposed to abide to. It's a very good strategy to use. Okay, this is a Fibonacci extension and how it looks like. Yeah, Fibonacci extension. This is a very simple Fibonacci extension. If you watch other videos where people show you Fibonacci extension, they are always usually very, from just by looking at it alone, as you're a beginner, it's always look very complex. So in this my channel now, I try as much as possible to make things simple. I try as much as possible to simplify things. So if you're new to this channel, please don't forget to like, subscribe to this channel. The more you like, the more you tell YouTube that look, this video is good, and they'll keep showing it to people that are newbies like you, understand, or people that wants to use this Fibonacci extension. Okay, let's dive into this without saying much. Okay, first and foremost, before you use a Fibonacci extension, I mentioned earlier that there are rules and regulations that needs to be followed. Okay, now the first rules and regulation that needs to be followed is that number one, make sure the market is not a consolidation market. So if you haven't known types of market structure, please do well to watch this video up here. Understand there are types of market structure. For instance, now a consolidation market is a market that we have three types of trend in the market. We have the uptrend, which is the buy trend. We have the downtrend, which is the sell trend, and then we have the consolidation trend, which is the sideways. The market is not going up, it's not going down, just going sideways, and that is the worst. That's the worst trend to ever be on. That's the worst structure to ever be on, because it can take all the money in your account, except maybe you're very skillful and you know how to use the support and resistance very well. That is why you can trade that. That's when you can know how to trade the consolidation trend. But I will still advise you to trade that. So now final good. So that's the first rules to use. So this market is not a consolidation market. You can see the CAD JPY is not a consolidation market. It's actually pushing up, even if it's not actually going like up, but it's actually pushing up. Okay, so we're going to be doing this analysis from the 4 hours. That's where we're going to be doing this analysis from. Okay, now so let's say I want to enter this analysis. Tomorrow is Monday, and I want to enter this trade, this CAD JPY, as of, let's say, as of March 3rd, 2024. So this is the current analysis. So I want to enter this trade, and then I want to do analysis. I want to work with my Fibonacci extension. The first thing is I would like to know the immediate open price, the immediate close price. It all depends. Am I about to take a downtrend or an uptrend? So this is a downtrend. In case you are new to forex trading, a downtrend is a trend that is going downward, and an uptrend is the reverse. So a downtrend is a trend that's going downward, and an uptrend is the reverse, the one that's going upward. Understand? So in this case right now, the market has sold. So from our analysis, we are looking at a sell trend. Remember that I said before that the trend is always your friend. So if you work with the trend, it's better off. So we're looking at a sell trend, because in overview, this market was consolidating from this point, and then there was a strong breakout. You can see there was a strong breakout and then a retest. So if I'm to enter this position, to look for a sell movement. So this is my last price, my last close price for the for up, and this is my last close price downwardly. So these two. So now I pick up my Fibonacci extension, retracement tools, and place it over here. So I drag the 0 to the last open price, to the last candle, the last week of the close price rather. So, and then if you're wondering what's my settings, you want your setting to be like this, so I'm gonna show you my settings. So you might want to pause the video and enter all the settings. So I will give you like 2 seconds to do that. Okay, please follow everything accurately. Follow everything accurately. Don't make any mistakes. So this is how my coordinate looks like. So you can in the coordinate section, just leave everything blank, leave it the way it is. In my visibility section, make sure it shows on every time frame. Make sure you click that it shows on every time frame. And then on the style, make sure you enter this accurately, the way it is, the colors, everything. And then once you are done, just click on OK. So now the rules. Rule 2, remember rule 1 is don't use Fibonacci extension on a consolidation trend. It will not work. It will not work. So make sure you use it on a moving trend, whether the trend is going up or down. So make sure it's a trending market. So in this case now, from my point 0, which is always my point of origin, so if I am targeting to enter a sell market, I'm targeting to enter a sell market, so how I will draw it is the same Fibonacci, but I'm going to drag it upwardly. If I'm targeting to enter a buy market rather, so I'll draw it upwardly. You can see where the last candle, where my last high, that is where I will stop. My immediate last high, let me use that word, my immediate last high, that's where I will stop. So now my also immediate last low, that's where I will enter this, that's where I will start drawing from. So from this point now, you see markets cut from here to this point. So I'll wait until when market goes to this point, gets to 0.618. so at the 0.618, that is where I will wait to take my buy entry. That's where I would have waited to take my buy entry, and then I will place my stop loss below my 0.79, at least about 20 pips. That's if I don't want to go aggressive. So that's if I don't want to go aggressive. So if you don't know much about lot size calculation and everything, do well to watch my video on lot size calculation strategy. Understand? So this is where I'll put my stop loss below my 20 pips below 0.79. So now once market, you can see market broke from this point, goes to this point, rejected again, came back, you can see came back again to retest this position, then finally pushed up again to finally pushed up again to point 0. You can see point 0, and then from this point 0 there was a minor retracement. It forms three candles. I can tell you for free that, see, this market will move from here, if possible retest this 0.618 again, and then that's if you want to take a sell from this 0.618 again to push back to retest 0.27, which is our oversold. overbought. Rather, from the overbought, it's advisable to exit the trade, because after a year now, the sell will be massive. From here, the sell will be massive. Understand? So if you can use Fibonacci extension to take a position or to track where you're going to enter your trade from. So Fibonacci extension is a very strong tool. We can wait for when trade wants to retrace, use it and enter a nice position. So from this point now, I can tell you that market goes to this point. You can see 0 point. From this 0 point, from this point 1, which is the point of origin, it went to point 0.618. From the 0.618, it pushed up to a very strong, you can see a very strong, it pushed up to point 0. From point 0, it started retracing, and there are several rejections. And I can tell you for free that the market will come down to this point to retest this point, 0.618 again, or it may be halfway, like this point here, and then push back to 0.27 and above, and then finally to move back to a sell. Yes, so you can watch out for this market. So let's use it also to test recent trending market, not consolidation. Recent trending market. Okay, let's look for a very good recent trending market. Okay, this was a good one. Let's enter. Let's check this one out. Let's say we're about to take a buy from this point. So you can see this was our last low. From our last low, this was our last high. Just follow the cursor. So from here now, you can see, let me make this chart wide enough so you can see it. So from this point now, you can see that the market actually started buying from this point. You can see after this massive rejection, this red candle here, started buying, pushed up from 0.79, pushed up strong. There wasn't even any form of retracement. It pushed up. Normally before, if it gets to 0.618 to retrace down, then finally push up again. But this one was a strong trend. So it's always very nice if you are using it for a trending market. So it goes to 0.7 as usual. It goes to 0 as usual. It retests. You can see there was a retest. So there was a retest here. From a retest from 0.7, you can see. So from this point, let's quickly draw this thing very well. Let's quickly draw this very well. It's not well. Like this now is better. Okay. So from this point now, you can see from this point now, it was almost halfway to the 0.618. Then there was a massive push, which bypassed 0.27. You can see that's the extension. When I say extension, and once it goes to bypass this point, the next sell was very massive. Look at the next sell here. This is where the next sell stopped. So it was massive. You can see it came back to that point of origin where we started from. So normally it's always very nice. It was very nice that when we get to that Fibonacci extension, we need to leave the trade. Yes, that's where. So if you're wondering where you put your stop loss and take profit, so you can place your take profits here. Or slightly above it. For me, I like putting it exactly at this 0.27. So I'm not a greedy trader. And then this is always where I put my stop loss, below the 20 pips or 10 pips below the 0.79, depending on the strategy I am using for my entry. Understand? So That's for a buy. Let's also look at it also in the area of a sell. Let's look for a strong, powerful trend. Okay, let's use this one. Okay, let's use this one. Okay, let's say this was to be with about to take a sell position, withdraw downwardly, and this was the let's say our last closing price. Our last closing price. That's, you're talking about sell. It was our lower low. This was our lower high and our lower low. Follow the cursor. This is our lower high, our lower low. So on the lower low here, we're about to take a very strong sell, and the market got from 0.1. You can see entered 0.7. So it's not always good to enter the trade at 0.79. Yes. So it's always good to enter the trade at 0.618. At this point, the market has already confirmed its movement. Understand? So you can see from here, it goes to this point, 0.618. The candle was massive. It moved to the point of, you can see it moved to the point of 0 as usual. There was a retracement at 0.0. You can see there was a retracement at 0.0. This time I didn't get to halfway. So from here, it was massive up to point. It moved to point 0.27, and then there was an extension to this point, and then the next move came down lower again, down to 0.618 again. So this analysis is in respect to